and welcome. You're watching Countdown right here on BloombergQuint Live. The market seemed to be decimated at this point. 5% knocked off the Nifty as well as the Sensex. 10,437 on the Nifty. Get you straight to the headlines then. Indian markets start the week with deep losses tracking global cues. The Nifty trades below 10,500, while the Sensex sheds over 2,300 points. Reliance is the biggest loser in trade, wiping out 1 lakh crore rupees in market cap. Sea of red across the globe. European stocks open with losses as the fall in crude prices and the spread of coronavirus makes investors panic. Stocks in Asia also witness a sell-off as all major indices end with losses of over 3%. Oil markets crashed more than 30% after a disagreement between OPEC and allies over production cut triggers a price war between Saudi Arabia and Russia. The rupee continues its downward trajectory against the dollar, dragged lower by weak domestic and foreign fund outflows. Good afternoon, Neeraj. Have to say that, but it's definitely not one of the afternoons that you would have anticipated.
Yeah, definitely not something that bulls wanted. Now, there are a lot of statistics, and we want to get into that. For the markets, it's arguably one of the biggest falls that we've seen intraday. Stocks like Reliance Industries have seen the sharpest fall in some 10, 12 years. There are companies, there are economies or the markets in the European region which have had the sharpest fall since September 2011, which was the day of the World Trade Tower attacks. And crude has fallen the most since 1991. So a bunch of statistics, I can throw multiple ones at you. What matters is the pricing. Crude 36, so obviously a bit off from the lows of the day. You got to keep that at the back of your mind. But our markets, well, it's been terrible, really. Get the heat map up on the screen and you will see this is about 5% lower for the Nifty Bank, etc. So everything is down. Look at that, and that tells you something, isn't it? But for the two stock specific news, which is Yes Bank as well as BPCL, almost everything else is under a cloud. Strong names. HDFC Bank is down at 4% after correcting quite dramatically. It's at the best or the lowest price to book that you've seen HDFC Bank trade at in 10 years, maybe more. But look at the cuts. ONGC down 15%, Vedanta down 13%. When did the last time you saw Reliance down 11%? And mind you, some of these names are cheap on the valuation front based on dividend yield or otherwise, but markets are not taking any of that. Globally exposed commodity names, IT names, TCS is down about 6.5%, ICICI Bank down 6%. So there's a lot of pain. Bajaj Finance is below the QIP price as well, if that holds any indication or any water really right now. But Devina, sum and substance, we can keep on arguing about or throw statistics about what individual stocks are at prices and all. But yeah, there is pain on the screen.
Yeah, and it's a very rudimentary check that we're going to do right now because
for the Dow futures as well, by the way.
It's locked down on lower circuit, so you're going to be watching out for the US equity markets, Europe as they open up for trade. In fact, we should get Europe before we move on to the broader market space to tell you how the FTSE CAC and the DAC are doing. So you've got FTSE 100, which is down 7.1% right now. CAC is down about 6.66 and DAX is down about 6%. So global markets are in a frenzy right now.
Yeah, mind you, DAX is down 700 points, the steepest fall since September 2011. As Devina said, it's rudimentary in cursory to talk about individual stocks at the broader spectrum. So let's skip that. Everything else is pain. Let's get across to some important market voices. Bala, Devina joins in right now first on the show, and we'll get you a lot of other voices as well. But Bala, thank you so much for taking the time out. I know buying the dips is the age or the adage. The question is, with what's happening in the US Treasury yields, with what's happened to the OPEC situation, is it difficult to say that this is the bottom?
Yeah, I think, Neeraj, while it's always difficult to find the bottom, at the same time, the fall in the oil price that has come as a surprise in the weekend, and also the oil dynamics completely is changing more towards 30 to 40 kind of range. That's something that's turning out to be positive for India from a broader perspective. And having said that, I think this fall off yesterday's in UAE as well as the likely fall in Dow Jones, back on the back of oil price, has got impact in Indian market. And the way I think sharp fall has come, and as you rightly mentioned earlier, that the market has been falling, and despite that, the market has fallen one of the sharpest falls that we have seen today. It essentially makes it in somewhat an opportunity to buy either on a stock specific basis or on an index level itself. So that is where I see it. But having said that, yes, with oil price dropping, one doesn't know actually how the escalation will happen to the global credit spreads, and we will see credit default swaps going up in the global space. If that happens and if it becomes quite severe, then it could have an impact on the credit market in general in the developed market, which could potentially have an impact on the equity market as well from sentiment point of view. And secondly, oil price being so low, if U.S. shale gas goes out of business because their cost of producing is high, if that happens, then we may probably look for some kind of recessionary trend global market. That also may keep the sentiment low from a global market perspective and could have an impact on, in general, flows. But having said that, from oil price being so low, I think from India perspective, may be seen as an opportunity. Of course, the government also may have to step up their activities on few structural reforms in boosting the growth aspects in especially in auto sectors and few others. This current crisis can be converted an opportunity for India perspective.
Right. That's a very interesting point there because, we still don't know how the credit markets are digesting this entire thing. And if that tends to spiral downwards, then this can be way out of hand. Bala, good afternoon to you. So, you hear many advices in such a period of time whether or not it's the right time to start a systematic investment plan, put money in mutual funds because these rates look extremely attractive. What kind of advice do you give out for investors who are sitting on idle cash?
Yeah, I think interestingly, since morning we've been discussing about this. Normally, whenever market falls or go up, we normally advocate SIP way of investing is the best way of investing in mutual funds. But having seen such a sharp fall, I think one must consider some lump sum investment. If somebody has got 100 rupees of investing, at least about 30-40 rupees can be considered as a lump sum investing rather than doing an SIP. And given the fact that the fall has been quite sharp, and then even the government of India can take few steps which can potentially convert this current crisis into an opportunity, and therefore we will probably see a gradual recovery coming back once the coronavirus settles down soon. So I think from an investing point of view, it's a high probability or maybe it's a reasonably good advisable thing to have some bit of lump sum consideration also at the current level.
Right. So, Bala, do you feel that the RBI then has, there is a possibility of the RBI stepping in a little bit early to take some responsive measures to soothe the frayed nerves right now?
I think the way we see is the Bank of India has done enough things in terms of building liquidity and bringing stability in the currency market, as well as having introduced LTRO, which is the long-term repo. Plus, also they are busy with the current S-Bank resolution. While the recent fall in commodity prices make a case actually for at least a 50 basis point rate cut, I don't think they will do it immediately. Probably they will look at doing this in the coming policy. Therefore, from a policy point of view, RBI should be more favorable both on the rates front as well as the liquidity front, which again, in some sense, should keep the overall sentiment alive. I think the bigger issue, I think, for us is actually the ETF flows, which has been primarily responsible for moving the market up. I think the ETF sell-off is also taking the market down, which I think, in my view, may not last for too long, and that I think should bring back some stability.
Bala, while obviously there are just too many risks at this point in time, but the fact that we were hoping for, bottoming out of the economy as well, that gets delayed, the recovery gets pushed back a little bit more. Do you feel in light of that then the pockets of consumption where people have started to put a little bit money in hopes of a recovery, that once again will start to fade away? Or you still find certain pockets attractive even at these levels?
No, I think while the slowdown is real, of course the hope was coming back with the various steps that the government was taking on one side, and second is good monsoon has been giving reasonably good rural output in terms of good harvest season. And while it was coming back, still there was some bit of hope to revive the auto sector in the form of introducing scrapping policy and so on and so forth. Maybe those, if it is introduced, maybe it can revive the growth. But of course, as you rightly pointed out, the growth is not coming back in a hurry. Even the consumption side, I think if the lenders become a little bit choosy on lending and they're not aggressive in terms of lending, naturally the credit growth contraction. One side you have deposit growth increase, other side there is a credit growth contraction. Then naturally it will not actually lead to an increase in demand growing, especially at this point of time when the whole sentiment is weak. Irrespective of interest rate being low, if there are no borrowers coming big time for borrowing, it will have an impact both on consumption as well as on banking sector growth.
All right. We'll leave it at that, Bala. Thank you so much for joining us with your views here. So according to Mr. A. Bala Subramaniam, because of the steepness and the pace of the drop, it actually is not a bad idea, Neeraj, to go ahead and not just do SIP investments, but have a certain proportion of your leftover money as a lump sum investment.
Yeah, well, so...
varying views, obviously.
Varying views, that's the limited point. I think Bala is a man of tremendous experience, so you give credits there. The only point is, as Devina, you said, that the markets are looking so precariously placed, and once the US markets start off, we don't quite know the repercussions of what happens once the treasury yields have fallen the way they have and what could happen going ahead. But by the way, the other big variable is crude, right? The futures have intraday basis posted the sharpest fall in 29 years, though it's slightly off from the lows of the day, but this comes after Russia and OPEC members failed to arrive at a consensus. Saudi Arabia also decided to ramp up production, hurting already weak sentiments. Keep in mind, the Middle Eastern markets have taken a turn for the worse the last 2 days. Stephen Chapniczynski of Bloomberg News now joins in to talk more about the future prices and what does he gather from listening into other people and his guests as well. Stephen, it's not looking good even though it's off the lows of the day.
Yeah, I mean, even though it's off the lows of the day, it's a 20% drop day over day, and there's a 9% drop on Friday. So oil is down quite a bit. We're trading at a level that makes it very difficult for barely anyone to make a profit when they sell this crude. And the whole reason for this entire drop kind of goes back to the coronavirus, which is really interesting. The coronavirus has taken a lot of demand out of the market. People aren't driving, they aren't flying in airplanes, and they're staying at home. So that cuts a lot of consumption out and a lot of demand. In order to face that and try to boost the market sentiment a little bit, you saw Saudi Arabia and OPEC members say, let's cut by 1.5 million barrels a day for the rest of the year and just prop up the market because the demand has lost so much. Russia, which was a key partner in other OPEC plus cuts that were made from 2016, didn't want to do that. And they felt that they were losing too much market share to producers, including those from the United States. So a deal wasn't made, and now oil is in free fall. It's a bloodbath. Stocks of companies are going down significantly. And what's going to happen is on everyone's mind. And what will likely happen is there will either be a deal with OPEC members and Russia, or you could start seeing other people just curb demand, or curb output rather. So that could be from the US shale producers. They're very much able to quickly shut in some of their output because they can take away some of the rigs that are pumping the oil, and they have some of the highest cost when in terms of pumping that oil. So going forward, we might see these US producers decide, hey, let's kind of cut that back, and then the market will come back into balance. But for right now, it's very bearish, and the low could go as low as $20 from the mid $30 we are right now for Brent, according to Morgan Stanley, Goldman Sachs. The banks are coming out and putting down their forecasts that we could get into uncharted territory for crude.
Right. Stephen, thanks very much for that. There is a whole lot of gloom out there as well with regards to commodity prices, especially crude. Talking about crude and the impact it's had on some of the oil marketing companies here, that's the only green spot that you're seeing in today's market session. So you've got the likes of an HPCL, BPCL. BPCL is up about 7% in today's session. HPCL itself is up about 8.7%. And IOC marginally higher by about 0.5%. Let's bring in Hemant Kapadia of KR Choksi. He's joining us right now to take us through some levels that we need to keep in mind. Hemant, very difficult market to trade, but what levels are you watching out for?
Very good afternoon, Devina. Thank you for having me. In terms of levels, we've gone past everything that mattered. One would have thought 10,550 was solid support, and we posted an intraday low of 10,294, Devina. 10.6 broadly, 10.6 and 10,000 are two what I believe very important levels from a longer term point of view. The relevance I would just like to draw your attention to. We haven't closed below 10,000 on the monthly chart since I believe September 2000. and 17. So one, that was important, and 10.6 was the bulwark, so to speak, and that has worked a few times in the past. So we've gone past all that. So anyway, that's history now. We've had multiple gaps. The VIX remains at elevated levels, which I don't remember seeing Indian VIX at these levels remaining. I mean, they peak, but they come off. This consistency of the VIX at this level haven't seen ever. So I think it's all gloom and doom, but at the risk of sounding optimistic, it's synchronized. It's US, France, Germany, India, everything, the world markets, it's a pandemonium and everybody is moving in the same way. I believe in the next 5 or 7 trading sessions, we'll see a bottom which will cap the downside to this sell-off that we are having. We're not there, but till the US doesn't recover, I don't think we will. But yes, in the next 5 or 7, I know 5-7 trading sessions at this rate we'll be at 7,000. I don't mean that. I don't mean to say that we're going to go to 7,000, but yeah, 10,000 is one level. And in the next, probably this week, we'd see a bottom. And if we see that bottom coming in worldwide, there will be an unsustainable V-shaped recovery. So one, no shorts currently. And if you are looking at nice stocks, I think one can buy 25% in a panic situation like this, because okay, this is unprecedented, but whenever we've seen something like this, the next 6 months or a year, the markets have given fantastic returns over the last 20 years.
Okay, let's see. Ajit Mishra, VP and Senior Technical Analyst at Equity Research at Religare Broking, is also joining. And Ajit, what's your call on the indices?
Yeah, good afternoon, Devina. So, Devina, after last week we were down around 13% from the record highs, and today we have opened close to around 3%, and we are currently trading down by around 5%. So, 18% kind of a decline that we have already seen from the record highs, and we usually don't see such kind of moves, in a month's time. So now, what I feel that since we have tested the 200 days exponential moving average today. So in fact, we have penetrated the same on the intraday basis, but on the closing basis, we are still maintaining of the same. And the last time we tested this level is close to around 2016. So I believe that yes, as Amin has said, that we might see some rebound consolidation in the index first prior to any further decline, considering the kind of decline that we have already seen. But again, it will be too early to say that we may see some reversals in the market very soon, unless we see something very significant recovery in the global markets as well. So my idea is rather focusing more on the individual stock specific ideas. For the index, at least one can go for index options. So 10,619 March call, which is trading close to around 175, one can consider fresh longs around the current levels with a stop of around 50 and 350 as a target.
Okay. Neeraj Diwan also is joining us right now, and we'll come back to talking about individual stock ideas from our technical experts. But Neeraj, good afternoon to you. What is the advice that you're giving clients right now in order to, just stem the panic that's currently?
Yeah, good afternoon. Yeah, you took the right word. It's actually a panic which we are seeing today. At least not only Indian, it's like a global panic. So, to make a case for a bottom or whether things will get all right from tomorrow, day after, it's really very, very difficult, because I think for something which no one knows, how far it can go further, how far can the virus affect, when will it start subsiding. So those are the answers which no one has right now globally. So that is what is creating a panic, and with the kind of cut we saw in the crude, which can have an effect on other factors also. So that is what is driving the market crazy today globally. So, but we are advising a client that these are opportunities for long-term investors. So you can't say that you'll buy today and the market can't go down by another 5-7%, or the stock can't go down by 5-7%. But that is very much still possible. Though we can't take a guess on the bottom. But if you're buying today with a 2-year perspective, you're getting very good companies at kind of prices which you are looking at buying them at. So there one should make a stock specific and a sector specific view and start buying slowly. You don't need to put all whatever cash you have left to work, because most of us are still invested and may not be having more than 20-30% cash. So that also one should stagger and invest slowly into the markets.
Neeraj, the problem with that theory only is, good afternoon Neeraj here again, is that the same narrative was mentioned and repeated when the Nifty was at about 11,000, right? Nothing wrong with it. I'm just saying that, is it prudent to wait for the market fall to stabilize a bit? I'm not saying this is an attempt to try and catch the bottom. It's just a tactical call that let stability return and then take a call on where to buy. Identify the pockets, yes, but why deploy money right now? We don't know what will happen when the US markets start off with the yields being where they are and the credit markets tightening there, the kind of outflows that will happen out of risky assets. So why try and deploy right now?
Yeah, good afternoon. Absolutely, you're right. So I'm not saying one should be in a hurry to buy. I'm saying you should have to identify whatever stocks you've identified and they are kind of reaching your price target. There one should start buying at least in staggered manner. Suppose you were at 1600, if you're looking at buying Reliance at 1,000 rupees and you're getting it close to 1,000 rupees, it makes sense to do some buying. So Reliance, after falling this kind of will not really fall by 30-40% of these levels. You already seen that kind of a fall in a large cap stock like Reliance, which may have lost 90,000 crores in one day in market cap. So I'm not saying that you put all your money to work, but if you wanted to buy 100 Reliance, maybe buy 10, 20, 30 today, because it is reaching a price level which you are comfortable buying it at. I'm not saying that you have to buy 20 stocks in the market, but at least whatever you have identified and they are reaching your targets, at least there one can be a little brave and put some money to work.
Yeah. Now keep in mind, okay, fine. That thesis, by the way, viewers may not be wrong. At some point of time in the future, if you don't make use of opportunities, and I don't know if this is the right opportunity, and I'm not getting into that debate. At some point of time in the future, you will kick yourself if you don't make use of opportunities. Keep in mind, though, today the problem, as we said, is that the US markets are not trading very optimistically right now. The picture on the Dow futures is not positive. We are looking at a start which is maybe 4-5% lower at least, and maybe could do more as well. So that is a problem, and the repercussions of which might be felt on Wednesday simply because we are off tomorrow. And therefore, I think for an Indian markets trader's perspective, he may not want to really be into any kind of positions, or even if you want to get out of a position, might want to get out of the position right now and not wait until Wednesday, because who knows what happens in 2 nights of trading in the global markets right now when the things are so volatile. So you've got to keep that at the back of your mind. Having said that, are our technical experts brave enough to take an overnight position or over 2 nights position? I mean, any specific stocks? You don't have to, only if you are completely convinced about.
No, I'm not, but if I were to, okay, there's one UPL, but I would not advise it because simply it makes no sense.
Okay.
But if I were to, I'd rather buy a Nifty call, but at 31 weeks, I don't think I can make money on it.
So what is UPL? If somebody were to do a UPL, what's your view there?
I believe one, we are oversold. Two, it has, okay, just 2 minutes. It hasn't broken yesterday's low despite a bad market. The hourly charts, MACD is given a buy. The 2 hourly is on the verge of giving a buy. So technically, it is showing some resilience. Is this worth a buy call? I don't know. But it's standing out as something which is better.
Okay. So even he's not going out and doing a buy call. You got to keep that at the back of him. And he's pointing out a chart here. Ajit, again, same thing to you. You don't have to give a call if you don't want to. But do you have a call?
So, Neeraj, see the market at current levels. We exactly don't know whether this rebound that we are seeing right now will extend in the incoming session. But what charts are indicating, at least on the individual stocks front, is indicating that we may continue to see a slide. So, on the basis of that, one can definitely consider Ambuja Cement and Voltas both on the short side. But since the options are not very liquid, it's very important that one should maintain a very strict stop. So close to around 200, one should maintain a stop for Ambuja Cement. It looks, distribution kind of a pattern that which has formed, and close to around 180 is what we are targeting. And similarly for the Voltas also, after retesting the record high, we are seeing selling pressure. So it's a kind of a profit-taking phase that we might continue to see in Voltas as well. So one should be strict with the stop loss of close to around 660, and 615 should be our target area.
Okay, a few stocks, today's session is seeing Godrej Properties higher by about 0.5% right now. So a few of these stocks that have maintained some amount of decorum in the markets is one of them is good short. But remember that stock has already fallen quite significantly from levels of 1100. So this could just be some amount of consolidation you're seeing in the stock. The last 3 months, the stock has given up all of its gain, but it's still up about 3% as you can see that fall that it's taken. Aside from that, one stock which has seen a free fall has been Relaxo. Since the time we've seen the markets cooling off, this stock has been coming off, but this is not the lowest point of the day. It's actually picked up from the lowest point of the day. The stock's at 665. No clear alarms with regards to the fundamentals, aside from the fact that the stock had run up quite a lot without any significant or meaningful correction. And therefore, this probably is that time where you are seeing profit taking on the stock. 1 month, the stock's been down about 10%. Neeraj, Devan, what do you do with some stocks like this, which have no fundamental concerns, but just the fact that the stocks have been overowned and they've run up too sharply, and therefore this is the time to take some profits off?
Yeah, actually, every time the market makes a bottom, I don't know whether the bottom is there or it's going to take some more time for the bottom, but every time you get these kind of corrections and market makes a bottom, you normally have new sectors and new stocks emerging which take the next leg up. So, you have to look for value. You have to look at value where the companies have been doing pretty well and they are corrected with the markets. And, and they initially also, if you see some sectors like the consumer sector, so there will be some stock there which were trading at very high valuation, some were trading at, valuation is not very expensive. So, there you will have to identify stocks which are more depending on domestic consumption, something like a Dabur, which last 2 quarters also, when you're seeing the slowdown, the results have been pretty decent and the stock has corrected with the market correction. And there will be other FMCG stocks also in that category, though I like Dabur in that category. Then there will be even stocks in the automobile space where we are seeing some sense of the bottoming as far as the demand is concerned. Something like a Maruti, which we saw the recent numbers showed very less fall in the volume as compared to the previous year. So previous month. So there also you can take a call on stocks like Maruti, Dabur, and there's HDFC Limited, which normally doesn't correct 5-6% a day. I don't remember last I saw this correcting by 5% a day after correcting for the last few days also. So you have to identify strong companies which whenever the bottom is made will bounce back faster. So, and you don't need to really buy today, but at least make that list and keep them under your target, and whenever they're reaching your price comfort point, you can add these kind of companies.
That's true. I want to just look at D-Mart as well. I mean, Avenue Supermarts, the stock's at 2130. So its offering came in at Summit at 2095, I believe. So it's still off. I mean, it's still higher than that, but it's made a swift retreat from levels of 2500 plus that we'd seen just a few days ago. It actually held on pretty well in the first few days of the correction. Then post that, I guess the extreme valuation has caught up to it, and there's some amount of panic profit taking that's happening on this stock as well. The stock's down about 5% odd. Last 3 months, however, it's still given you decent returns of about 19% odd. And the other one is the HDFC Bank, and this one from its peak is down closer to about 18% odd. So these are value buys. It's sub 1100 for HDFC Bank. It's actually come off the day's lows. So that would have been something. 3% low. It was down about 4.5% odd. From there, it's actually picked up and come back here. But any of these two stocks and some of the other names that were good buys that you were ready to buy at a higher price, Neeraj, but they've come off now, and it's probably a good enough time to buy them. HDFC Bank, Avenue Supermarts, Bajaj Finance.
I would say the kind of growth that we saw in HDFC Bank and even Bajaj Finance, which I think once the whole correction is over, their growth will still may take a hit for a quarter, but will not take a hit for more than a quarter or 2 quarters. So these are the kind of stocks which I feel Bajaj Finance I like. I think the kind of growth they're showing, so the premium valuation that they were trading at may continue, so they can bounce back faster. Similar is the case of HDFC Bank also. The kind of growth they have been showing has been pretty intact, and so they'll also bounce back pretty faster. So in this space also, but then when you talk about stocks like Avenue Supermart, it gets very difficult for a fundamental analyst to give a call because the kind of multiple they are trading at are huge. So even after the correction, it will be trading at a very heavy premium to its peers. So I would rather refrain from investing in them, or rather invest where I feel value. So there one stock will be Godrej Consumer, which had seen the stock correction in August, September to about 530-40 levels. It went to 740-50. Now it's down to maybe 600 odd levels. So that will also be one stock which is corrected with this market correction. So I would more or less focus with consumption rated stock, domestic consumption rated stock. So like I mentioned, some of these FMCG names, auto names like Maruti. Then even something like a TCS, which has corrected a lot. We've seen TCS not doing well in the last few weeks, and today also seen a massive correction there. So TCS will also fall in that category where below 2000, I think it's a good opportunity for long-term investors to start accumulating TCS.
Okay.
Devina, it's interesting that today a lot of people were talking about how if Reliance continues to fall and TCS doesn't, TCS market cap might overtake RIL. I mean, just for statistics sake, that's an interesting bit of trivia as well. But TCS itself has fallen about 6% and has been a very sharp one. Anyway. But yeah, speaking of falls, just before Devina moves ahead with the other pocket, just want to mark something that we have on our website as well. Urge viewers to log on to our website and try and read more about such stories as well on the market. But just look at what's happened here. Today, the sectoral underperformers, Nifty Bank has fallen the most since November 16 and it's traded at the lowest level since December 2018. Auto, since November 16 and the lowest level since June 2014. FMCG is a bit more resilient, but it's had the biggest fall since July 2017. And IT, and we were talking about TCS, arguably the most resilient, and which is why you see it's trading only at the lowest level since October 2019. So obviously, IT has not had as but terrible a time, a lot more defensive, IT and FMCG, and those stocks are still okay, but the others are really, really cracking in trade. So not a good day, and we're still down about 4.5%, Devina.
Right, and just want to talk about some other stocks. Since we were talking about the likes of Avenue Supermarts, Bajaj Finance, HDFC Bank. Dr. Lal PathLabs is also one stock which has been on the list of many analysts, and the stock has not done all that badly in this recent correction. Contrary to the stock that really went up in a hurry, which was Metropolis. That stock has corrected about 20% from its peak. So in the comparison of both these stocks, Metropolis had really outdone Dr. Lal PathLabs in the last month or so. From there, the stock has seen, quite a steep correction. However, because of the run-up that it had seen, it's still up about 26%. Dr. Lal didn't give you that kind of a move. It actually kind of stagnated. Metropolis had that head start, and therefore, even while it's corrected 20% from the highest, in the last 3 months, it's still giving you returns of about 26%. I mean, any of these stocks, Metropolis, Dr. Lal PathLabs, from the larger names, Bajaj Finance, HDFC Bank.
Lal's is looking not bad, Devina, because like I said, it didn't go up that much, and it looks relatively stable. On the other hand, probably Metropolis has had a one-way run. So HDFC Bank, high beta stock, not much to lose out at 1100, frankly speaking, especially since it's come off from 1300. But the medium-term picture, Devina, seems to have got spoiled for the time being. So I would go for something like a Bajaj Finance or a Dr. Lal's lab instead of HDFC Bank.
Okay.
Just before we thank Neeraj Diwan, just one question. Neeraj, you mentioned and you gave us a number of examples of how businesses which look good, where earnings are looking okay, and therefore those businesses should be done well. My question is, what about businesses that have gotten bombed out? And are you trying to find something from the fallen heroes? And the sector that I specifically want to ask you about is auto anchors. You've identified some of these companies when nobody was talking about them, and they've done exceptionally well in their heydays. Do you find the same kind of flavor right now in any of the auto anchors currently?
Yeah, actually, among the fallen heroes, like you mentioned, I think if you take the automobile, auto ancillary space as such, I would rather concentrate right now on the large cap auto names, because if there's improvement happening or if there's a bottom being made in the auto, then auto ancillaries which are trading at really despair kind of valuation will also bounce back. But right now the interest is not there to buy mid cap or small cap space because of what happened in the classification by SEBI also 2 years back. So that interest doesn't come back that fast. So I would rather look at the large cap space. I would look at auto names. They also corrected, like I mentioned, Maruti has corrected from the peak, so it's corrected a lot from the peak. So those kind of companies should bounce back faster, which are more into passenger vehicles. And after they bounce back and we get a sense that the economy is bottomed and you're seeing numbers improvement, then I think you can even invest in auto ancillaries a little later when a little more expensive. The kind of return you get when they start moving is tremendous. So even if you don't buy something at 100 rupees, but at 120 rupees, it will give you a good return and go to 40 very fast. But then you don't have the waiting time which it can take right now. So I'm looking at fallen heroes, but they're also mostly into the large cap space right now. Like even besides auto, the another sector which is infrastructure, something like a Larsen & Toubro, which has fallen from the peak. It's fallen, I think, 40-50% around from the peak. So that also is a good opportunity to look at.
Okay, Neeraj, we'll leave it at that. Thanks much for taking the time out and being with us and giving us that perspective. Clear in his views, not buying into auto anchs. Shouldn't surprise anybody, but just making that point that not buying into auto anchs at all. Samir Kadra is with us though. Let's see if he's buying into something. Samir, straight off the bat, financials have taken a really steep hit.
Yep.
A lot of companies are available at valuations, forget the prices, but the valuations at which they were not available for a long time.
Yep.
Would you be a buyer? Or would you wait and bide your time?
No, I would make a list of them, start a SIP. Because
start an SIP starting today.
Starting today, or even I would have done it 2 weeks back also. Because see, finding the bottom again becomes a very difficult process for anyone. Forget about the retail or institutional ends. And for me, I think the mid caps is a place for me even right now where I can start a SIP, or even I'm doing it. Let's say in that, and I'm even advising the clients to do that, because see what is happening. There's one, anticipation of a widespread issues getting created. Secondly, to some extent, it's actually happening. So that's why the levels are coming off drastically. Then the crude issue has come up. So that's one new horizon. You don't know how it will play out. And in my sense, it will be a very worst case scenario for oil producing nations, not for the oil consuming. To a certain extent to oil consuming, but not that heavily. So I think it's better to start a SIP. What I would suggest is make it bi-monthly SIP rather than once a month. Because right now you're crashing every day. So you better utilize it by making it a bi-monthly SIP rather than making it a monthly SIP. Because in a month you may recover technically, or you might show bounces. So your SIP can be delayed largely. So I think make a quicker SIP intervals now, and you'll really benefit in the next 6 to 12 months. I think it'll wear off starting in April end and May start.
Okay. I just want an opinion, Ajit Mishra, on some of these names. Vinati Organics has fallen 11.5% in today's session. Does that put a bottom in place for the counter? There's more left to go on the downside. And a stock like Deepak Nitrite has done about 5.5%. HDFC Life as well at 515. What would you do?
See, Deepak Nitrite, Devina, we have hardly seen any profit taking. In fact, it's just 50 bucks down from the record highs. So still looks very strong, but considering the market scenario, I would recommend one should accumulate in a staggered manner rather initiating a fresh buy at one go. So close to around, let's say 260, 280, that's the area where one can accumulate Deepak Nitrite. And if it's a trading bet, then 440 on the closing list should be the stop loss. Vinati Organics, we are seeing this consolidation happening from almost nearly 7-8 months, and the lower band is close to around 850, which we have almost reached. So now again, it's very important for any recovery that stock should hold this level. But considering the chart pattern, the indications are in the favor of further decline. So in case if you have any position, one should maintain a very strict stop at 850. And for the fresh long also, that should be the stop loss. HDFC Life, Devina, like any other life insurance company, we are seeing excessive pressure. And I believe that this pressure may subside a bit close to around, let's say, 490, 480 zone. So again, I would recommend utilizing this correction to accumulate the stock on dips close to around 490 to 500 levels. And 460 is the area where one should maintain a stop.
Okay, got that. Sameer, what would you do with Avenue Supermarts? Would you accumulate?
No, I would. The contraction of valuations is not that attractive right now, and certain times what happens if the stock hasn't corrected during the correction, it's really goes wild when even other stocks start to pick up. So it's better to hold off, because I think as per consumption of Indian patterns, I would, if a SIP is going on, then it's fine. But right now, calling a bottom in Avenue Supermarts is very difficult, because the QIP has been, the OFS has been done. The liquidity is in the system now. So that 2% extra stock which is there before the selling of the promoter. Now how that plays off to the valuations, because the premium of a certain valuation is because of the liquidity risk in that system as well. So when the liquidity increases of the float, then the valuations also contract in a downwards market. So I think I'll better be off and watch on it rather than putting my money right now.
Okay. What else? We spoke about a bunch of stocks which are looking wobbly. I mean, it's pretty interesting how now this whole space, which is insurance too, is taking it on the chin. Almost nothing is getting spared, but for 2 or 3 names. Yes Bank is interestingly doing rather well for itself and up about 31%, rock solid. And BPCL has actually had some gains. So we may shrug off the impact of crude and how the risk-averse nature might be there, but BP is still holding out about 5%. A divestment announcement also might have something to do with it. Would you be a buyer here?
I would be a seller.
You would be a seller in BPCL?
I'll be
Why
a seller.
so?
2 reasons. It's straight off indication that, low crude amount will help all these refineries. But if you see the throughput, the volume growths, they will crash, because if the aviation stocks, the volumes crash out, then the ATF, which is the biggest, let's say, the continuous demand for them, that also comes off. If your IIP is going down drastically, and if it really goes down from the Feb and March levels as well. Right now the PMIs are holding off, in India especially. But I think right now the whole valuation is still at least 14 to 15% above from where I think it becomes much more appropriate for everyone to buy in.
But you're buying for the event, right? The expressions of interest that will come in. I'm guessing money will come in for one of the OMCs.
That can be a technical bounce. That cannot be the ultimate goal of creating that wealth. But
no, of course not. I'm just asking if there's a tactical buy here.
But that tactical buy actually happened today. If you see, it's open, then it went to 12%, now it's back to 5%. So that technical trade, because the only problem is no one will carry it forward.
Okay.
No one's carrying the trade forward. So every day you'll see that 3%, 4% net increase into the price. But I still feel there's more downside in OMCs still much, because if you see the gross margin revenue margins are crashing still in Singapore. And if you see, China refineries are 40% off their peak volumes. They are facing a liquidity crunch. So all these kind of issues will impact the gross margins. So, and I really don't know how much will they pass on the benefit to the end consumer from here on.
Okay.
Just want to look at Inox and PVR as well. And a few other names like an Indigo, an Interglobe Aviation. You've got the likes of an IRCTC. All of these impacted heavily because of the coronavirus tourism impact. IRCTC now at 1291 from levels of about 1950. Travel and tourism getting impacted big time. Ajit, and I'll come to Sameer in a bit for his fundamental view, but Ajit, Inox, PVR, obviously IRCTC doesn't have any takers right now, but even an Interglobe Aviation?
Among these three, Devina, I feel Inox is a better bet comparatively because we have seen a very strong correction of late in the last 3 weeks from 500 to 360 levels now. And technically, this level close to around 340, 320 is a very strong support area considering the monthly supports. So my point of view is that one should again be gradual in the approach of accumulating this stock. And the time horizon should also be like at least 3 to 6 months, considering that it's a slow mover. But as per the levels, definitely it's a very good level to accumulate Inox with a 3 to 6 month of time horizon.
Okay. These stocks were back to levels they were two and a half, 6, 7 months ago. Inox was at 385. When it reported its quarter 2 numbers. Post that, what would stop you from buying this now?
No, I think Inox in PVR, especially yesterday I came from Indigo. I didn't see any drop. The only trouble is when their international routes take a hit. So right now Doha has closed down any Indian inbound flights. So that will impact Indigo. So there are international impacts. There is a certain drop in domestic travel as well. But again, I would like to see it spread through, let's say, till June quarter. If till the June quarter and March results are not that bad, then there are bottoms being formed. But I think before results, it becomes very difficult to judge unless they really come out with a report saying that this much impact is there and this is not there. Inox, I'll be still putting a SIP out here. I'll start a SIP out here because Inox, somewhere from my terms of valuation, the expansions they are doing, they're somewhere there where PVR was 3 years back. And if you see, the cash flows are much better out there. The capex requirements have gone lower from next 6 months to 9 months. So I think Inox is a better play for me in the whole pack right now.
Okay. ICICI Bank's at 456, SBI is at 252. IndusInd Bank's at 903, which is an 11% drop in today's session. Kotak Mahindra Bank is the other one also, should watch out for to see how that stock's doing. That's down about 3.5%. So that's probably the outperformer amongst all of the stocks that have fallen. And along with that, obviously, HDFC Bank and Yes Bank, which is up about 30%. Within the banking lot, any trade that you would take?
No.
None whatsoever?
No.
Okay. So no trade on the banking names. Ajit, would you take a position on any banking names? Ajit?
Yeah, Devina, can you please come again?
Yeah, I was asking if you would take any position on any banking names.
So, yes, Devina, but on the short side, considering that we have seen a fresh breakdown in Federal Bank, the stock has been consolidating for quite some time and witnessed a breakdown of late. So the risk reward is very favorable and we are eyeing 60 to 58 levels in the near future. So one can go short in Federal Bank at the current levels also with 78 as a stop loss and 60 as a target.
Okay. Samir, anything that within this fall has you said make a list of stocks and start doing an SIP. If the same question was put to you, which would be those stocks that are there on your list?
So I think this Axis Bank, let's start from that banking. Axis Bank would be one of the stocks, and then Aegis Logistics is there, Indian Energy Exchange is there, Mold Tech Packaging, there's this company called that. So over there, I'm looking for companies who have increased their capacity past 6 months or past 12 months, and they are expanding in next 6 months and 12 months as well, because that's where the volume pickup will happen. It's not easy to shift the supply from China to non-China, and the imports of all these companies, whatever I've told you, is next to zero. So they are more indigenously dependent to each other. And a lot of businesses are not concerned with import and export, let's say, of any kind of good. So I think it's better to stay with this kind of a list and go for a cash companies. Even IRCTC, to a certain extent, I'm watching, but I still feel it's still overvalued. So if it if in this kind of fall it comes to 900, 950 levels, then I'll be really interested in that.
Well, 5% lower for IRCTC. Let's see if there is more pain in store. Guys, we're very close to market end for the day as well. Keep that at the back of your mind. And I think one thing that people got to keep in mind, I think a lot of past responses to questions from any of the guests would probably not hold true right now, simply because the nature of the event has been so dramatically different. So keep that at the back of your mind. The only thing is that you can look for while making that investment is a good company with probably sound earning potential, and whether that can change. Sameer, you track the specialty chemical space, and any thoughts on Vinati Organics fundamentally, this oil market coming off? Is the 11% fall pricing in the negatives for Vinati?
See, here's what happens. These companies haven't seen that any drastic falls in, let's say, last 6 months or 9 months. Because their fundamentals are strong, they're able to provide that volume throughput. But what happens when everyone piles on the same stock, and when the liquidation starts to come, it comes very drastically and very quickly. So on the fundamental side, yes, I'm very convinced of the company. But on the price side, I'm much happier doing a SIP. That's why I'm focusing on that. From here on as well, it's not something I'm calling a bottom or I see another 15-20% downside. But really, when you are so concentrated on buying, and when the tide turns for these kind of stocks, it really, because I don't know whether we are in the bottom of the market or not. I'm looking more towards the S&P 500 values rather than anything else.
Yeah, sure.
So I think it's better to do a SIP in specialty chemicals. Even Deepak Nitrite from my side is still a SIP mode, even at 490-500 rupees, because the rally just started for them. And even if you see, the prices have gone 10 to 15% up in the market for them. But how much kind of a volume pickup comes? That's the question I think everyone needs to ask themselves. And that's really uncertain, because out here I would still like that by March end, everyone gives a commentary on how it worked out.
Yeah, well, this quarter's earnings call would be really, really important. I mean, for more reasons than one. I mean, and for a clutch of financial names as well, the rates at which they're able to borrow money, maybe from the global markets, and deploy it here would also be interesting. By the way, before we start wrapping, just keep in mind, ONGC is now down 16.5%. On the Sensex, all the 30 stocks are in the red, not a single stock in the green. On the Nifty, maybe 2 or 3 are in the green, but hardly any green worth talking about. Just before we wrap up, keep in mind the unintended beneficiary, you would reckon, of what's happening in the sentiment on Reliance Industries is the Idea Cellular. It's up about 18% today at about 3.92, so do watch out for that one. And then the OMCs, as we said, have actually done well. Fundamentally, Sameer is not tuned in it, but technically, Ajit Mishra, BPCL closing in not at the highest point of the day. Do you reckon if you had a long, you would take home that long?
See, yes, you can consider, but again, one needs to be very specific when it comes to trading position. And I feel that we have some of these blue chip counters which are looking very strong and very lucrative, considering the kind of decline that we've seen. In fact, I was just looking at the HDFC Bank chart, which has rebounded very sharply and is just down by around 1.5%. So in case somebody has to take something home, then HDFC Bank should be the trade.
Okay, watch out for HDFC Bank, and we'll talk about that a bit later on, or post-close as well with Sameer. But let's start wrapping up the markets. 5% lower. This is very steep. We haven't seen such a fall in some time, and therefore it's a bit painful for people who are long for sure, by mistake also. Nifty Bank about 1,300 points. So on Friday, if we thought that the worst of the fall is now behind us, well, today took us and a lot of other people by surprise. Tomorrow's a holiday. Let's brace ourselves for Wednesday if indeed the world markets continue to fall the way they are. Mid caps and the small caps too have fallen quite a bit, 5% lower there. What about the large caps though? Let me talk about them first. Yes Bank 31%, BPCL, and to an extent Bharti Infra and iShare. Both Vodafone and Bharti Infra have done well. But aside of that, look at the cuts that have come in. ONGC, Vedanta, Z, Reliance Industries. I think the single largest point contribution that Reliance would have made in a really long time on the Nifty 50. IndusInd Bank, Tata Steel, Tata Motors, almost everything globally exposed is down. Local names, SBI is down about 7%. TCS 6.5% down. Bajaj Auto, safe name, cash on the books. Market is not paying any heed to that. Axis Bank is down about 5.5% too. So a clutch of these names are correcting quite viciously, or have corrected quite viciously today. Let's wait and watch if there's any respite on Wednesday. A lot of people would be saying, thank God tomorrow markets are shut. At least one day of no pain, Devina.
Yep, but then that can amplify the pain on Wednesday. That's
Maybe
the only
it does,
issue. So the mid caps and the small caps also are down almost 5% a block. So 4.9% for the small cap index, another 4.5% for the mid cap index. There's no point talking about the gainers because they're really far and few. And actually, there's and the rest of the crowd is all deeply in the red. RBL Bank amongst the Nifty 500 is the top loser. That's got cuts of 22.75%. So it's a massive knockdown for RBL Bank. Indiabulls Housing as well. They have declared that they do have those 81 bonds, about 662 odd crores from Yes Bank. Stocks on 18%. Edelweiss is now sub 70. Again, back at 67 on 64 rupees rather for Edelweiss, down 16%. Adani Transmission, this one in the heyday was one of the favorites, started moving up. In fact, all of the Adani stocks have started moving up. Stocks now down 13.5%. Sobha, IRCTC locked down on lower circuit. Oil India, upstream companies taking a knock to the chin because of the slump in crude oil prices. Oil India is also down today. Vinati Organics, that's down about 12%. Big cut there. Deepak Nitrite 6% lower. Wockhardt is down as well. That too seen a sharp cut in today's session. I'm just picking up names from all different sectors because that's the quantum of and the ferocity of the selling pressure that's come in today across the board. There's not a single space that's managed to stay afloat in this kind of carnage that we're seeing across the equity markets in today's session. Just to put it into perspective, we're now down about closer to 17% and the sharpest drop that we've actually seen, that's come in just about 35 trading sessions. In 35 trading sessions, the market has given up almost 17-18%. So very sharp correction that we're seeing. This is the closing that you've got for the Nifty Bank, which is down 1,300 plus points, down about 4.7%. For the Nifty, we're down about 5% in the session. Not managing to scale beyond the 10,500 mark, but a probable solace not at the lowest point of the day as well.
Yeah, I mean, the statistics would be pretty disturbing, I must say. You would probably agree, but just the kind of falls that we've seen in a clutch of names leave a bit to be desired. Get the price contribution, and like I said, I don't remember seeing such a large bond contribution from Reliance Industries in probably the longest time. I don't know how many number of years, if at all, maybe at the highest point contribution from Reliance Industries ever on the Nifty, 140 odd points down, and then some of the other heavyweights too. Because almost everything has fallen, Devina.
And this is not really budged actually. So even when the Nifty was down 700 points, Reliance is down 140 points. Nifty's recovered 546 points under. Reliance is still contributing 140 points to that. Yeah. But today's volatility has been immense. I think India VIX should be the next thing that we need to keep an eye out on. India VIX has been up 21%. This is still not the highest. I think we clocked closer to 33.5, 34. From there we've come down. But this is still looking toppish. Remember, the last time we've seen these levels of 35 has been in May 2014. And most of the times, every instance that we've hit around 30, 31, markets have recovered from there. It has looked toppish. But, we're in different times and a different global setup right now. So it's very difficult to say whether or not this could turn out to be the top of India VIX and we could see a move in the opposite direction.
Yeah, and just one last thing on the volumes in today's session. Should just pull up what the numbers will look like. Okay, 52,000 crores. I think
on the
record.
higher end.
Probably record turnover?
It's not the record turnover, but it is on the higher end. You've got the futures and options market missing the action.
Yeah, but the cash market turnover seems to be very, very high in the session today. If not the record, this would be amongst the top 5 for sure, Devina. 50,000 crores is not something that I've at least seen quite regularly. Even during the election time, I think the number was 45,000 crores, but I may be wrong. It's certainly high for sure.
No, 45. We've seen 45,000 as a regularity now in this correction in the last few days. It's just been so active in the cash market. But quick closing comments from our technical experts. Ajit, come to you first. Tomorrow's going to be a holiday, so we're going to talk about Wednesday and what we need to watch out for.
So Devina, again, I would recommend keep a close eye on Bank Nifty because it's leading the decline and it's underperforming the benchmark by nearly 5-6%. And still, unfortunately, we still have room on the downside in the banking index. So close to around 25,500 is the area where Bank Nifty has 200 days exponential moving average in the weekly chart. Nifty has already tested today and managed to sustain above the same. But considering that we still have room on the downside, we might slide further in days to come. So again, it's very critical that Bank Nifty should sustain about 26,000 for any recovery. Otherwise, we are eyeing maybe 4-digit numbers in Nifty as well.
Even category-wise,
All right. Hemit, your closing thoughts?
I believe there's some more pain left. Couple of days more here and there. Would have to see how US reacts. Hope US tanks some more, so we at least see a semblance of stability coming in. So stay away. I think post Thursday is when I stick my neck out and say time to get slightly adventurous because I believe Thursday, Friday is the day where we see a small respite coming in, which might very well turn out to be a pleasant surprise. So not much to analyze, frankly speaking, and like you yourself mentioned, Devina, a week's at 31, oh, that's scary. I mean, if it sustains over here, so you can't even venture out to buy calls. There's no question of shorting any puts, that's harakiri. So stay away. Post Thursday, one can go selectively long.
Okay. Sameer, just one final question. When you look at companies like HDFC Bank, for example, lowest price to book in the last 10 years or maybe even longer, but that doesn't mean anything in a scenario when fund flows are dictating what's happening to individual names, right?
So that's where, irrespective of whatever fall has taken place, if you see last 3 quarters, the provisions have sequentially gone up, irrespective of any new management change which is due in October. And I think the stress is increasing for every bank, whether it's HDFC or anyone else. The problem with HDFC becomes that whenever the fund flows switch, HDFC becomes the victim of it. Secondly, I'll still stay away from HDFC till the time the new management comes in and the situation gets better in terms of providing for whatever they want to do. Irrespective, they have the highest asset quality, but let's say even 0.25% of asset quality deterioration for HDFC Bank is more impactful rather than as compared to any other bank of that nature. So I think it's better to stay away from HDFC Bank for a while, even if you see the lowest in 10 to 15 years price to book value. But the only problem is management uncertainty always kicks in. How much ever you can say that it's going to be a non-event, it somehow becomes an event for any kind of a bank or any asset. I'll be really surprised on the upside if it doesn't happen for HDFC Bank.
Okay. Thanks, gentlemen, all of you for joining in today and giving us your thoughts. Really appreciate your time. Viewers, thanks for tuning in as well on this day, wherein we've arguably had one of the sharpest corrections that we've seen in a really long time, in all probability from a points perspective ever. But it's a wrap on the day's action on BloombergQuint. From Devina and me and the team that put this show together, thanks so much for watching. But the market wrap will sum up the entire day's action in moments from now.